How's it going? Welcome back. It's Jonathan. Now in this video, I don't really want to be talking about Bitcoin because we know what's happening in Bitcoin. We're still waiting for a potential low mid to end of March. We'll see how that plays out. So I thought today I would go in because there's been several posts in my social media feed saying I haven't seen a video from you for a while, so what's going on? Super busy, but there is a topic that I've been wanting to talk about, and that is one of the mass pressure segments that I've been doing. Okay, so mass pressure charts are simply forecast charts, or some other people refer to them as roadmaps, flight plans, simply forecasting, etc. If you want to go back to the essence of it, it's mass pressure, which was a concept developed by Gann. And if you just search mass pressure, that's where you'll start to get all the research. I don't recommend that if you're brand new to investing, or if you haven't sort of got the basics down pat yet, that you go straight into mass pressure charting, because it's going to waste your time. And what I mean by wasting your time is you're going to be going down a realm that you're not yet ready for, based on your foundation of understanding of market cycles, etc. Anyway, so I had been obviously doing mass pressure charts for a little while, and I'd learned from Gann himself. I got a lot of education through my affiliation with Flack when I was working in market cycle forecasting as financial planning. And then obviously I learned again a bit more from Philip J. Anderson, who wrote the book The Secret Life of Real Estate and Banking. So if you've done any of that, if you haven't done any of that, I should say, go ahead and start your journey in the secret life of real estate and banking, because that'll introduce you to cycles and how the phenomena plays out, etc. But I've gone even deeper. I've got on board, I guess, a lot more mentoring and coaching, and even sort of gone down my own route. And The Art of Forecasting Financial Markets was a book that I bought from Daniel. It's not currently available on Amazon, but I did find one. It's depending on the currency at the time, depending on if it's on special or not, you're going to pay about $1,000 for it. I got it just for under $1,000. So it's an expensive book, but this is going to go into more details. It's actually given me another angle that I can use when I build my forecast, and gives me greater insight into the markets that I didn't have before when I was learning from these other guys. So kudos to Daniel. And yeah, so Wheels Within Wheels I've spoken about before on the channel. If you're new here, this is probably your first introduction. This is going to go into market cycles, and also the phenomena of wheels within wheels, meaning, so wheels within wheels means that there's shorter term cycles within longer term cycles, and so forth. So the wheel just goes around and round and round, with the wheel being in another wheel. So the topic that I want to talk today is, first of all, market divergences, or what they would call as polarity flips in the market. When you've built a cycle, or you've built a framework for your cycle, and what happens is the market does something else. Okay, now when you've got a perfect market cycle, I'm going to show you very, very soon. When you have a perfect market cycle, generally what happens is, all that's happening is the polarity of that cycle is flipping in. I hope to give you some good examples today. Now I am running on the remote PC through Windows 365, as you can see, so there might be a bit of a delay between what I want it to do and what's actually happened. But what I want to do is pop on my cycle and go over, say, 10 years of this gold market, and just give you an idea, or at least a little framework on the polarity flips in the market. Because when you build a cycle, as I said, you might be bullish or bearish, it might be neutral. The market's going up, down, sideways. But what happens when the cycle suggests a bull market, but then what happens is a bear market? Well, what you find is, generally speaking, the market isn't, or sorry, I should say, the cycle isn't wrong. It's just that the cycle has flipped. And what you have to do is you have to find out which one of those cycles is flipping. And it's quite easy to do when you have a perfect forecast. Now, I'm not going to say I have a perfect forecast for gold, but I think I got a pretty dang good one. Okay, now I did learn this. What I did is I took some elements from Daniel, and I took some elements from another mentor of mine, Frank, and then I found out some other cycles. And what I did was I built what I would like to say is a bit of a master cycle. And all I'm looking for, generally speaking, is for the polarity flips, and to see which polarity is flipping, or which cycle is flipping. So I've got my gold cycle. These are all the cycles we use. So lunar cycles, roadmap decades. I've got time factor roadmaps, Gann's Jupiter planetary cycle, master cycles, great cycles, etc. I was going to use the gold cycle. Alrighty, so what we have here automatically is, what year am I in? Year 2011. Okay, probably not the best one to start on. Should start on like at least 2014 or whatever. So this is a clean chart. We've got the gold cycle, and we can see that definitely speaking, the market went up and then pretty much sideways and then down. And then the forecast was suggesting sideways, down, to the bottom and then up. So what we had here was, this was our polarity flip here. And obviously this here was another polarity flip with the market moving up instead of going sideways. So what we want to do, and I don't know if I can do it because I started a bit too far back, but what I want to do is I want to go in and I want to see which cycle flipped, because we definitely know here that these two, well this one, this peak and this trough here, this high and this low, were flipped. So I want to know what else flipped. So I'm not going to show you the years that I'm using to build the cycle, so there's going to be a bit of blurring because, you know, propriety, self-study, etc. Also, just blow open my whole thesis of analysis. So just give me a moment. I'm going to start flipping some cycles. We'll see if we can start to analyze which ones that actually flipped. So I'm going to invert some, and we're going to see if we can build a framework that looks like the market where it's rising. So I want to know which cycle is moving higher and which one's moving lower, and see if I can flip them to get more of a better curve. So this one, now we have the market rallying higher until peak, a fall off, another peak, another drop off, and we got that rise. So that's more in line. So the market rallying higher until peak, drop off, another peak, drop off, another peak. So market rallying higher, peak, drop off, peak. All I did there was I flipped 2 of the cycles. Okay, that's all I did. Now I'm going to reset this and we're going to move forward. Off. So I'm going to go in now and I'm going to move this master cycle from 2011 to 2012, and we'll just see what happened here. And then I'll scoot out into like 2018, 2019, 2020, just so you can see actually what happened. So now I'm going to move this up just so we have a better view. And now we're going to see if we can find which cycles had flipped in this one. So remember, what you see on your screen right now is, I'd like to say, like the master cycle of, if gold is not having any polarity flips in the market, that is what gold should look like. But let's see if we can find any flips. So the market predominantly is moving down this time. So we want to flip a few and see if we can get those sort of curves. The curve here is a bit steep still. Want that end of year sell-off if possible, not too steep. This is probably a best fit scenario, so let's zoom in. That's probably a best fit scenario at the moment for this cycle. Market from January scooted up, but then we had our low, which came in May, spot on, our peaks, and then we had a polarity flip here. We could go in and see what other cycle was flipping before we had our end of year decline. Again, once you've got the main cycles that are playing out, all you've got to do is move in. All right, let's go in and change that cycle. Oh geez, another polarity flip. I'm going to go in and do the exact same thing. Now you might be thinking, what the hell, this is boring. This isn't the golden, the golden ticket to success that I was signing up to. And that's okay, because this isn't about having a golden ticket of success. This is about market cycles and understanding the structure of market cycles. So what I'd like to see if I can find any, so yeah, sure, we got the market going down, but I want to see if we can find any which has this deep dip here. I don't know if it's possible, but we'll just play around and see if we can find out which cycles we're flipping. It's probably a bit more concise, so there we go. We had 3 cycles flipping in this instance, and we got our large sell-off, and then sort of sideways action, and then sell-off again. So 3 of those cycles flipped. Again, just going to reiterate this again. We have a master cycle, and the cycle in any market is going to do what it's going to do, okay? All we need to find out is if the standard cycle is playing out, or if any of them are flipping, okay? So when someone puts out a forecast that's based on, probability like this, and it doesn't go according to plan, that doesn't mean the forecast is wrong. It just means that you need to find out which one has flipped. So what I've done is I've turned off the top one and I've inverted that, and that's automatically given us a nice cycle, which is looking quite similar. Now I want to see if I can make it a bit nicer by just flipping some other ones, just to see if we can get those curves. So market trailing up into the top, you can sort of see this, another top here, big sharp sell-off, another top here, sell off, and then the rally. Not as concise or perfect, but we can definitely see that I believe these two cycles probably have the most effect this year. See if I can flip another one to get it a bit more. It's a bit ugly, that one. All right, no worries. So those, I reckon that's probably best fit in this instance. All right, let's move to say 2018. Let's go out. 2018, as you can see, on the cusp of things, you don't really need to flip the cycle. The cycle played out pretty perfectly. If we could try and refine this, we could see what ones were inverting. Nope, did not invert. You get the sideways action, but it sort of comes out too far for my liking before the sharp sell-off, and then it's too choppy here, so that's probably not the cycle that flipped. That cycle probably didn't flip, though we could play around now to see which other ones. No. This is quite nice, this sort of formation here, this formation here, that we didn't get the rally, so it probably wasn't those two. And I can't really get the best fit on this one, but at least we had, if we were to draw a cycle and we were to find out which ones were actually flipping, we'd have a pretty damn good idea. Anyway, so that's 2018. Let's go ahead and reset it. Move forward to 2019. Alrighty, so 2019 is here. So what did 2019 say without any flips in the cycle? Well, it suggested that the market was going to trade sideways until possibly June and then a sharp rally. That didn't quite occur, so let's go ahead and flip some of these cycles to see if we can get a nicer fit. Nope, that's flipping down, flipping down. Alright, so that one's a bit nice. We'll flip that cycle. It's a bit too sharp. This doesn't really give us what we're looking for. Again, the cycle in itself was bullish. Excuse me. The cycle in itself was bullish. I just would have liked to get a clearer picture around this July area, but it doesn't look like we can. Doesn't look like we can build anything with that. Oh, there's a nice one. So we get a sharp rally, decline into March, another sharp rally into what's that? August. A decline, a sharp rally which didn't occur, and then a fall there. So let's try and see if we can refine it a bit more. Probably not textbook this one. Or were any of them textbook? Probably not, but I reckon these two last cycles flipped might be the best case scenario for this one. Alrighty, so let's move on to 2020. So this was 2020 cycle. This was probably one of the best, textbooks without any flipping occurring. So you rally and then a decline, which we got, then a rally, and then the slow end of sell-off. So let me just draw on screen. You can definitely see up, down, sideways, up, and then down. Definitely textbook that one. Let's go to 2021. 2021 was another one that was not as textbook, but pretty much suggested, if you look at the cycle, that the market was going to do nothing. And we sort of had our sell-offs, our peaks, our troughs, and the market both, in the forecast and also the actual market itself, didn't do anything. But is there a possibility that we can refine this a bit more? Let's go take a look. All right, so flipping that cycle, we get a bullish one. Flipping that, still bullish. I like the choppiness. This one is probably, if we flip this cycle, decline into March, rally into May, decline into July, rally into September, decline into October, rally into pretty much, though, I think that cycle flipped is probably textbook. Perfect. Let's go ahead now and do 2022. Nah, just kidding. I'm doing 2022. But that is how I go in and I build the cycles, and then what I need to do throughout the years, I need to find out which cycle is flipping, which is why when I put out the forecast, and if you're in the back end, you'd see a lot of the forecasts that I do. The polarity flips is key, and it's why when I do the forecast, I put out like 4 of them because I'm trying to find which polarity may flip, and I do that based on lots of economic and geopolitical events that possibly will take place in the year. And when I build it, I want to know, are there things going to be like war? Is there going to be stock market issues regarding potential industries that are going under, like the banks or industrials or anything like that? So what I want to do is I want to build several different cycles, and I want to know, based on the past, we're looking back in specific time counts, based on the past, what is the most likely scenario? If we're going to have war cycles repeating, well, a definite bull run might not be on the cards, where potentially an end of year rally might be more likely. And speaking about that, or going down the same tune there, commodities, I've already put out the gold cycle for 2022, and it's in the back, and you can go and take a look, and you'll see that the cycle has pretty much played out on par regarding what gold was expected to do and what it's actually doing. So I'll stop waffling here. The point of this message today was, yes, these things are possible to do. You need to have the right cycles in play. You need to play around with it. Like, I've spent years on this, so you need to do the exact same thing. You need to spend years drafting and using Excel. I used to use this program because this is something I've become accustomed to using. I find a lot easier than Excel, though. You need to do this because cycles, you could pay me for the cycles, whatever. If that's something that you want to do, go ahead. But it's going to be the ultimate edge. And I always say that timing the market is more important than time in the market. And sure, you might not capture every low to the day in timing the market, but it's going to get you out when things start to get a bit woeful, and it's going to get you in when things start to look a bit, optimistic. So that's it. That's all I have. I don't know how long I went for. Hopefully under 20 minutes. But I just hope that the key takeaway is that this is possible and you can do it, okay? So you can do this for the Dow Jones, you can do this for the Aussie market. I've done it for cryptocurrency. I've gone through, found all the crypto cycles, and I built the forecasts. It's possible, and that's all I have. Talk to you soon.